Welcome to Counterpoint. I'm Tanya Granick-Allen. Bitcoin, Ethereum, Dogecoin, Tether. These are just a few of the thousands of cryptocurrencies on the market. If you have no clue as to what I'm referring, then you're going to want to stick around for today's discussion. Cryptocurrency entered our world in 2009 and has taken off like a wild storm. Some people use crypto to conduct everyday purchases and transactions, while others use it to store wealth, a censorship-free way for the crypto rich, if you will. But so many questions abound, such as what exactly is cryptocurrency? What is its function? Is it safe? And what kind of currency is it actually? Are the transactions encrypted? Can they be traced? Well, joining me now to help unpack it all is Dr. Sofia Johan, Associate Professor in the Finance Department of the Florida Atlantic University. Hi, Dr. Johan. Thank you so much for joining me.
Thank you for having me, Tanya.
So this is a fascinating topic for me. I hope to get educated by this program. But especially during COVID, I hear more and more about cryptocurrency and how this is really the thing that everybody needs to jump on, both for investors and for practical purposes. So maybe we'll just start at the basics. What are cryptocurrencies?
Cryptocurrencies are just digital assets. So they're digital assets created and stored on a blockchain technology. We are very familiar with digital credits and debits in our bank account, but in this case, it's the differentiation is that it's decentralized. So it's created by the public, stored within the public realm, and there is no real creation of value based on the traditional central banks. There is no some of the cryptos that you mentioned have no no standard. There's no gold standard.
Right.
But there are cryptos that are created called stablecoin that are now based on a sort of a benchmark of gold prices. So it's just that. That's just assets, digital assets.
Just something people use to exchange value for something else, basically.
Yes, very few people, though.
Very few people. So but it's a good question. What percentage of the world uses or owns cryptocurrencies?
It's hard to say. We don't know. That's the beauty of it. It's so decentralized. There is no record other than you being on a blockchain. There are thousands of cryptocurrencies. I think and on record, there's over 5,000 different types of cryptos. We don't know who the users are. It's very think of it as the Swiss bank account. It's numbered. We don't have any information on the holder. We don't even know where they're stored. You can be stored on a platform that's accessible via the internet. Mm-hmm. With the public key, it can be stored on your computer, on your phone. So that's the beauty of it. We don't know.
Now you keep using this phrase, blockchain. What is a blockchain, or what is blockchain?
Blockchain is just a decentralized ledger. So it's basically a record that's kept not only on one computer, but millions of computers. So everybody has access to this ledger, and you can manipulate it. You can add to it, but it's verified by the herd, so to speak, right, by the group. So you can't necessarily it's secure because any entries will be verified with the millions of users.
So it's basically like an algorithm, almost like an algorithm that keeps track of who has money and who's traded it where, but through an anonymous kind of platform?
Yes, and that's also the creation of cryptocurrency. The cryptocurrency is created by crypto mining. So these miners will solve these algorithms, and once they add on to that blockchain and add value to that blockchain, what happens is that they are paid in cryptocurrencies. So, and that's where this whole debate about the use of computer power. So when I say very few people have access to crypto, because you're either mining it, therefore creating the crypto, you have crypto, or you're able to buy crypto.
So there's a set amount in the system, if you will.
Yes.
It's not, like there's the Canadian Mint that's just printing out money as it's needed. There is a certain amount until more is mined.
Yes, that's the beauty of it. It's decentralized. There is no central bank currently. Having said that, there are, I believe, 87 central banks that are creating or looking into what they call central bank digital currency.
Wow.
That means it's no longer decentralized.
Okay, I want to ask more about that because you're opening up a whole new can of worms that I'm really interested in. But we have to take a quick commercial break and we'll be right back.
Thank you.
Welcome back. We're unpacking all that is cryptocurrency today on our show, and joining me is Dr. Sofia Johan. Dr. Johan, before we went to commercial break, one of the attractions of cryptocurrency for some is that it's not traceable, it's not really stored, it's not a traditional bank where your assets or your money is stored. But now we hear that some of the larger banks are trying to get in on cryptocurrency. Can you explain this for us, please?
Well, as it is, large companies have tried to get in. So you've got Facebook with their cryptocurrency. Alipay is huge in China. And you've got Amazon trying to get into or going into cryptocurrency. So with this decentralized idea where banks are no longer creating value or money, what the central banks are trying to think or trying to do is create their own cryptocurrency. So, it's sort of restabilizing the financial market, so to speak. So I think as it stands, there's probably about 87 countries, if I'm not mistaken, that are planning or looking into it. Canada's doing it. The US is also thinking about it or in plans. They're actually further behind than Canada. Canada's a bit ahead. They've already started looking into the regulatory issues and what have you.
So at the Bank of Canada is looking into this, or like the big five banks kind of thing?
Bank of Canada. The big five banks are probably setting up the infrastructure to enable it, but it has to be acknowledged as a legal currency, legal tender, right?
Right.
So the central banks are doing that. The European banks, the Bank of Japan, all the other banks are definitely have plans, or more importantly, have started to look into the infrastructure process of the problem is it also has to be recognized around the world. So it can't just be recognized within the country. So there has to be interoperability within jurisdictions. So there's got to be international buy-in, and that's coming very soon.
Well, because there's a lot of law that would have to play into setting up the regulations and the cadre in which this has to operate. We may have lost a few viewers on just understanding where international law is, but let's say on a practical level, I'm a Canadian citizen, maybe I have some Bitcoin. Where can I use this Bitcoin? Where can I use this Ethereum? How do I use it?
Currently, you can't just go to your local money changer and get cash. Neither will the banks allow you to do that currently, but you could go online and have, sort of a barter system. So I believe in some countries it is recognized as currency, but it's not a negotiable instrument. So you can trade other currency for it, but it's not actually negotiable as you would cash. So I could give you.
I can't go to the corner store and buy a chocolate bar with a Bitcoin. Probably a Bitcoin's worth a lot more than a chocolate bar. But. Well,
the problem is today it could be worth 60,000. Tomorrow it could be worth 10,000, or it could be worth 35,000. So as a chocolate bar owner, so what would you want to have that risk where you could have the Bitcoin, you've given up your chocolate, and tomorrow your Bitcoin could be worthless. So the volatility is so significantly high that it's right now it's not necessarily the network effects, you can't use it much. So a lot of people are buying these to store value in the expectation that in the future it will be mainstream.
So when you say it's volatile, what drives that volatility?
It's speculation. Nobody knows what's happening. In one day, China could make it illegal. Another day, China's opening up Alipay. Right. It is very volatile, and we don't know.
And we don't know how much. Do we know how much is in the system?
We don't, researchers have tried to gather that data, but it changes significantly on an hourly basis. So we don't really know. There's no real central body recording this. And we have different platforms, creating these indices. So you can get indices on the values of cryptos. There are companies who are collecting this information and gathering them and making them public, but there are also numerous platforms that have this. So imagine if you have a NASDAQ and an IZ and the Nigerian Stock Exchange, but there are thousands of them.
Wow. It seems, again, a lot to digest here, and we still have 2 more segments, so I hope that folks don't run away here. But when we come back from the break, I want to discuss more of the practical uses, how if somebody wants to get in on the crypto game, if you will, what would that mean? How would they acquire it? How do they go about it? These practical questions, I think, are on the top of mind for so many viewers, and it would be very good if we could address some of those. So we're going to take a quick commercial break, and we will be right back. Welcome back. We're discussing all things cryptocurrency with Dr. Sofia Johan. Dr. Johan, why are there so many cryptocurrencies?
Everybody wants to get in on the game before at the ground level, right? So this is, remember when, you probably don't remember, I remember when credit cards were still very new. That the idea of using cash or paying for things without having to pay for things until it's a month later, right? That was still very new. So this is the same thing. This is digital asset. This is a digital currency as credit cards were at that point. So there's really no difference. And it's just the companies want to get in before the platforms, the crypto miners, the ICOs, they want to get in before it gets, overly saturated.
Right, and you have early investors who went in maybe 10 years ago, and now they're probably multimillionaires, maybe even billionaires.
Yes, but you also don't hear about the ones who do lose money. So the ones who were robbed of, remember, you're storing you store your assets on a virtual platform.
Right.
So what happens when that virtual platform disappears? Especially if you haven't mined the crypto, you've bought the crypto, you've paid your own money for a Bitcoin. Right. Now, where do you store it? What happens when that storage facility, it's not like your bank, it's like your bank disappearing. Poof. Right? And that can easily happen. So that's why there's a lot of issues with the not just the investment in crypto or the creation of crypto, but also the storage of crypto. So there's also a lot of interest now in security. So there are indices that measure the cybersecurity of countries. I think Canada is, I believe, number 30 ahead of Australia, I believe, and the US is 18. So lots of countries have different forms of cybersecurity.
So just so that I can understand this clearly, so there are people who own Bitcoin or who had owned maybe some Bitcoin, had it stored on some server somewhere, and poof, it disappeared, and they're left with nothing because there's no customer service line. There's an algorithm, and that's what you're dealing with, an algorithm essentially.
Yes.
And that's it.
And that's it. And then you have your security systems where you have your private keys, where you're holding it, you're storing you're storing your statement basically on your computer. But if it's stored on a platform, then it's like do you know how we didn't trust online banks before?
Right.
And now they're more mainstream. Online banks are going public, and everybody is very comfortable using online banks. But now imagine if you're not even secure, there's no insurance, there's no deposit insurance. Right. And these platforms aren't regulated. To some extent they are in some countries, but you could theoretically open a platform, sell your currency, and people will deposit money or whatever assets they have, and then what? Wow. So that's the main issue. I mean, it's just as you hear the success stories where your neighbor is making tons of money and has just bought a Maserati based on, a purchase of Bitcoin 3 weeks ago, there are others who may not necessarily have come out as well. And I think that's the balance with the regulation. They're trying to educate people on not only the benefits of Bitcoin and the future potential, not necessarily Bitcoin, but crypto assets, but just the dangers of crypto assets as it stands.
So can cryptocurrency fail?
In what sense?
Well, we hear about, currencies around the world. Sometimes there is movement within the political regimes and the currency gets devalued. Is cryptocurrency still open to that kind of vulnerability?
Definitely, even more so, because there is no monetary policymaker overseeing that. There is no central bank. There is no control. You can't just, there is no jacking up of interest rates or reducing interest rates. There's no management of the actual value of currency. So it can, and that's again, that is both it's a double-edged sword, right? So you get to get significant value or significant gains you would probably never get, betting on the Japanese yen. But there's also significant losses.
Now, you always hear people say, get in, buy some Bitcoin, buy some Ethereum. It's all the rage. Will prices still go up?
We don't know.
Because it depends how much is mined, right? How much product is out there.
Exactly, and it's first mover advantage. Which currency will be more mainstream than others? So are you likely more to use when digital currency becomes mainstream, where I can go buy a car, I can go to my supermarket and we'll go to Walgreens or go to Shoppers and pay with my Bitcoin on my phone, which currency will you be using? Will it be decentralized Bitcoin and Ethereum or Dogecoin, or will it be the Bank of Canada digital currency?
Okay, we're going to pick up this conversation in just a few moments. Welcome back. We're wrapping up our discussion on all things cryptocurrency with Dr. Sofia Johan, Associate Professor in the Finance Department at Florida Atlantic University. So earlier we were saying that some people could cash out or trade their Bitcoin into their local currency. How does that work? Or maybe I've misrepresented it. Is that a possibility, and how would that work?
There's always a possibility, because if there's a market, if there are people who hold Bitcoin and there are others who want to buy Bitcoin at a prevailing price, there's always a buyer for anything that's being sold. So yes, there is a market. The question is whether the market is regulated. The question is whether the transaction is regulated. But currently there are platforms you can buy and sell your Bitcoin. Or your crypto assets, any crypto asset. There are because there are the miners who have created the Bitcoin and want to get money for it, or real currency that they can actually use instead of holding the value. There are others who want to buy it now because they think it's low and therefore retain the value as it goes up. So there's always a market for anything in this world.
But you know how when you say you're traveling to a foreign country and you take your Canadian dollars and say you want to transfer them into the euro, you know what the price is, it's listed, it's posted, it's kind of an internationally held price. That doesn't exist with these cryptocurrencies. There's no going rate of, okay, if you want to cash out to Canadian dollars, this is how much you'll get for it.
There are for the different exchanges, but there's no international standard. There's not even national standards, I would say. I mean, there are prevailing market rates, so to speak, but it's a very, very small market. There aren't that many people who are actively trading in digital assets, and the ones that are very sophisticated. So they're doing it via algorithms. There are funds that you can invest in to buy fractional ownership of Bitcoin, because Bitcoin is expensive, and if to buy one Bitcoin it's a significant investment for many people like us. But then there are funds, there are specialist fund managers that are actually investing in Bitcoin with their expert knowledge, and you can buy a fund that invests in Bitcoin. Or not. When I say Bitcoin, I mean generally crypto assets,
right?
But it's still something that a lot of wealth managers and a lot of fund managers are looking into, because it's still very, very high risk. There's high volatility, and it's not something that you would want a pension fund to consider.
For a large institutional investor or something of the sort.
Yes.
Okay. I hear that, or I've read that cryptocurrencies have been used in illegal schemes for illicit activities and whatnot, drug trade. Is this true? Is cryptocurrency playing a larger role in illegal activities?
It gets reported, but no. So yes, I mean, because that's the beauty of it, is that it is, it's decentralized. So even if you were to detect a large amount being held on a blockchain, you don't know which country to call to carry out that. Which police department do you call? I mean, it's being held on the internet, and more importantly, it's non-traceable. It's it's impossible to trace the holders. And you can now more easily, because of these, as we said, they're tradable, you could exchange the Bitcoin for the different currencies as other investors want to invest. So it of course it's being done, but there is no difference from holding a Swiss bank account, because it's almost impossible to trace.
And if somebody hacks this criminal who's holding all this Bitcoin, offshore or off grid, if you will, if someone hacks his account, he has no one to go after, does he?
No, which is, again,
it's just such an interesting thing.
There'll be a movie about this, I'm sure.
So is cryptocurrency the future of money?
Yes.
This is where we're heading.
I think it is. It's a question of whether it's going to be much more regulated than we think it's going to be, as it is now. It is where we're headed. I mean, if you recall, from the Wright brothers to our first man in space was 60 years, right? So crypto assets have been around for, a decade. So we're not far off, and we're already you've got all these countries coming on board to make it possible. You've got companies that have the infrastructure. It's here to stay. And it's just a question of when.
Okay, well, thank you so much. You've answered so many of my questions, and I appreciate this lesson in cryptocurrency, Dr. Johan. Appreciate it.
Thank you for having me.
Thank you. Enlightening discussion. I feel like I know a lot more about cryptocurrency after that, and I better know a lot more because, after all, apparently it is the future of money around the world. For Counterpoint, I'm Tanya Granick-Allen.